everyone, welcome back. Today we need to talk about why the S&P 500 is dropping and why I am doing in this particular situation what I am doing. The market has been under pressure, and if you are feeling a little bit uneasy, you are not alone. But instead of panicking, let's break down what's really causing this drop and the risks ahead as well as opportunities and what I am currently doing in my portfolio. I will also share why I've added Booking, Apple, Mercado Libre, and opened some cash secured puts positions on Tesla, Palantir, Nvidia, plus why I'm keeping some cash on the sidelines. Let's dive in. But I always want to be the first one to disclaimer that this video is meant for educational and entertainment purposes. While I'm using my own money, always understand that investing or trading comes with risks. So what you do, you should always take responsibility of your own money if you lose your money. But I'm going to start off by just sharing with you what's going on in the market. So I'm going to share a chart from TradingView chart and do a quick technical analysis and show you some interesting things that I have been observing. Currently, you can see here that this is today and it's really not looking good for almost most of the stocks in the US market. You can see right now that Meta is down 4%. Yesterday it was down, I think, almost by 9%. And I'm recording this video today, and I want to release it as soon as possible today so that you can actually see what's really going on. And I'm recording this, it's 20 past 12 p.m. Pacific Standard Time, and the market is about to close like in 40 minutes. But you can see really that there's been a really big drop, and the S&P 500 is 5%, almost 6% down. And I'm going to show you a little bit of technical analysis on that. And you can see that most of these publicly listed stocks in the US, they have been dropping. Can you believe it that yesterday, this particular security, let me just do the S&P 500, but SPY is an exchange traded fund that tracks the S&P 500. So it mirrors the same kind of trend that you see. But now what you see here is that it closed at around this point. So basically this was at this level, right, yesterday. So it has really dropped to this level. What this means is it has dropped by, as you can see here from yesterday's close, the S&P 500 by almost 6%. But this has been something that has been happening for some time. Let's see, if I look at the daily chart and increase my time horizon here, you can see that from the highest point that it was, you can see here that the S&P 500 was at this level. This is not cooperating. Okay, so let me just do this, and I can just delete it and take another. So you can see here right now, oh boy, it means essentially it means the S&P 500 has dropped by 17% from the highest point it was this year. That was around in February, I think. So we are now entering the bear territory. Millionaires are made in bear territory, mostly. So if you really understand what you are going to buy, this might be a good opportunity to buy, assuming you had cash and you know what you are buying. So I'm going to share more about that. Now, I'm going to just show you some plays that I did take, and you can just see here that, you know, Palantir, Booking is a very interesting business, and I'm not going to do a deep dive on this because, you know, it's going to take long. But I have been doing research on this particular stock, but you can see that this stock currently, it costs 4,300, let's say 4,400. And you see that it has gone down by 2%. So I've opened the position on this. And the idea is, because I had a big waiting on the tech sector, but I also had some cash. This is kind of like a good thing because this is a big stock in terms of their financials are good, but also booking when people are traveling. They also have wide interest in people who travel using rentals, right? Rental cars, insurance, and they also have other search engines. Let's say if you are looking for flights. So still, I think over the medium to long term, people might still travel. And when people travel, this means sometimes in most cases, people will book via most of their agencies. Again, this is not an endorsement for you to buy this, but I'm just telling you what I'm doing. And another interesting stock that I actually bought is what is called Mercado Libre. And let me just share with you guys here Mercado Libre. I hope you see it. So Mercado Libre currently the stock price is 1,500, 1,850. But you can see that because of the situation that is happening, this is a very interesting stock because people still want to buy online, and you can see that they have platforms in Brazil, Mexico, and I usually like to look at what our focus, and of course I do my own analysis, say. You see, right now it's more like at the lower end from analysts. They are still projecting that it might go to 3,000, but the average is 2.4. But again, when I'm doing my own investment, I like to always do my own due diligence and say to myself, why am I buying this stock, right? So in this particular case, I'm going to explain to you first, why is the US stock market dropping, right? The first thing is that interest rates and the Fed has been tightening the policy for a while, and investors are worried that rates might stay higher. And today, Chair Powell actually he said that is not going to quickly drop interest rates because now inflation is going to be an issue because of the tariffs. When inflation goes up, what this means is that the Fed, in this particular case, their role is to make sure that there is stable employment level, right? That means unemployment should be around 4%, and then inflation target should be around 2%. So what they do, they have to do that delicate balance. Now, it's not that easy in most cases. So what they do is if they reduce interest rates, it means stocks might actually rally up. But with inflation going up in the US, it means that is a very tricky situation. So higher rates, on the other hand, also makes borrowing more expensive and puts pressure on growth stocks. So if you are looking at stocks that are growth stocks, for example, if you are looking at Tesla, most people, they buy cars, they borrow, right? So what that means, if interest rates increase, that means it's going to be more expensive. So the sales might likely drop. And again, in economics, we use ceteris paribus. In other words, to say all things constant. Sometimes things change. There might be things like that might just come up from nowhere. So it's very, very important to understand that there are risks when you are investing. So you should manage your risks. Now, there is the geopolitical tension and trade wars. President Trump in the Rose Garden on 2nd of April levied tariffs as high as, I think, 64% for China. And on Canada, we were kind of like exempted because we are part of the USMCA, which is the US, Mexico, Canada trade agreement. And there are certain commodities, goods and services that are actually included in that. But still, there were some tariffs on the auto sector. I think it's 25%. And what usually happens is some parts, they are actually, the cars, they are mostly assembled in Canada, right? In Windsor, in Ontario. And some parts may go to the US, Michigan, and come back because it was very easy for the flow of goods. But now all that has been disrupted, right? What that means is that for Canadian companies that were in the auto sector, people are going to likely lose jobs. And I think this is something that is worrisome But the government of Canada actually has retaliated in this particular case, but in a very careful and measured way, because tariffs, by their very nature, they simply increase the prices for the particular country that is levying them for the importers. So in this case, it means it's more expensive to import cars from outside. So that would encourage investors and businesses to actually then build their factories in America. But it's going to take time, maybe 4 to 5 years, right, to set up the factory. But over the long term, that might be the issue. Now, again, in the US, the other issue that is interesting, their debt, I think the last time that I checked, is the government debt was like 36 trillion. And in one way or the other, this was supposed to be resolved. So probably President Trump, in doing these tariffs, he's probably trying to force the Fed to reduce interest rates, but also reducing the treasury yields. And what this means is that if this works out over the short term, this might probably cause a situation where the rates or borrowing rates might be cheaper. But now they are inflationary situations, and unless this is maybe just a negotiating card that President Trump wants to use. But I think in one way or the other, when I look at these tariffs, it might be a negotiating tactic. So if countries then say, okay, there might be 3 scenarios, they will say China might say, okay, or any other country, they might say, okay, we are going to retaliate. That might escalate into what is called a trade war, and it might also push the global economy into a recession, and some people might lose jobs. So that is something that is not nice. But when I look at things, it is very, very important. In my case, I like to look at it using what we call the policy matrix analysis in economics. There are always winners and losers in a particular situation, right? So some people might win, but some people might lose. So when you look at the stakeholders, when tariffs are levied, it means the importers are going to pay more, but over the long term, it means the domestic industry, if indeed is going to, industries or companies are going to relocate to United States, right? It means over the long term, they are going to create more jobs, they are going to manufacture back home. But I was looking at Danny Alves, he's one of the analysts that I follow, and he was giving an example of Apple to say, if you look at companies that are really exposed to China, you have Apple, Nike, Tesla, right? And what's going to happen is, what if China targets those companies and retaliate? But the reason why, in my case, I like Tesla, I like Apple, it has very strong fundamentals. Their balance sheet is strong, but also most of their money also comes from the service sectors, and I don't see that being affected in a big way. Even if their profit margins decline, they still have a strong balance sheet, right? But Daniel Alves was saying on CNBC, I was watching it, that it might actually cause the prices of iPhones maybe to increase from 1,000 to 3,500, and they estimate that it's gonna cost maybe about 30 billion to move one factory to the United States. So again, I don't know what President Trump is trying to do and to achieve in this playbook, but generally, trade wars, tariffs, usually, especially if they are excessive, in that case, they are not really, I mean, the net effect usually they can be nasty, because one country might retaliate, the other one retaliates, and it just increases the cost. And what is important, like I said, is that the citizen of that particular country are the ones. So geopolitical changes is something that is causing some stocks to actually drop. NVIDIA is also another stock that is exposed, because if you have customers globally and there are these tariffs, so this is a very fluid situation. Now, earnings and economic slowdown, I see this potentially, in this coming reporting season, some stocks have to actually, businesses may have to reduce their projections, their guidance. And what that means is that might cause the stocks to maybe drop a little bit. But some managers, what they do is they lowball, they reduce their guidance to a level that they can easily beat. And then when they announce in the next quarter, then the stock might go up. Again, the key thing is that right now the market sentiment has been bearish. In other words, the S&P 500, like I showed you, is now almost 17% down, only 3% before we get into a bearish territory. Now, a bear market, basically, it's at least 20% drop in the market from the previous high. So that's where we are getting to. Again, for me, when I see this, it's very exciting. So I'm going to share with you what I'm doing in my portfolio because, number one, when stocks drop like the way they have dropped, if you have a bit of cash and you really understand the business that you are investing in, that's actually a wonderful opportunity to buy, right? Because what it means now, there's a lot of fear. Most funds, they are, getting out of the equities market, going to other safe assets or securities. Some might be going to gold, some might be going on cash, some might be going on US dollar. Now, what this means is that in terms of the fundamental basis, if you look at some companies, they have a lot of free cash flows. They have very strong fundamentals, right? If I was looking at booking, right? Travel demand is still strong in my view, and the booking has a great cash flow. I see it as a solid long-term play. So I'm going to continue to buy as it drops, buy more shares, and that is another long play that I'm going to be buying. I've started buying. Now, Apple, even if with the China risks, I still think Apple remains as a dominant force in the market. Long term, I believe it will continue to outperform. Or actually another bull case could be that if these tariffs are for negotiating, right, and if they are then removed, this market is discounted, these stocks, it might actually go up. I couldn't believe it to see Apple was at some point $240 per share. Now I was looking at it, and when I just bought a few shares a moment ago, I bought it at $890 a share. I'm going to continue buying if it drops, right? I just average down few shares. And that's the advantage of having cash on the portfolio. Moments like this, they can really make you either rich if you understand what you are doing and you invest in wonderful companies and diversify your risk. Now, there are also risks, I must say, but at the end of the day, these are wonderful businesses. Now, on Palantir and NVIDIA, I did cash secure puts, but these are AI plays, and I want exposure to NVIDIA because it has really dropped from about over $150. Palantir is making moves in the data analytics. So what I do with the cash secured put, I've explained in the video, but I'm going to summarize it here. I get paid the premium. I open the position by selling a position, right? Selling a put option. In other words, let me give you an example for Tesla, right? Tesla right now, when I checked, it was like $245. So I got paid $320 right now for next week, right? The strike price for which expires next week. So what this means is with a strike price of 215. So if Tesla drops to 215, I'm going to be assigned that stock, right? So that means I will buy it for 215, but I got into this position now, so I got paid $320 now. But if Tesla doesn't drop to 215, I will still keep my $320 next week. So that's the point. If it gets to that point, so the idea is it has really gone down, but I still want to buy it even lower. So that's the deal. The risk is that if Tesla drops to zero, I would still be required to buy it at the strike price, right? So that means in that case, I would buy it at 221,500. So that's the risk in that case, minus the 300 in this case. If I then buy it at that level, minus the premium that I will have paid, in that case, 320. So it has to be a solid business. It still produces cars, but right now, what is happening in the market is there's a bearish sentiment. Now, unless things change, this might go on for some time. But I'm comfortable with that. I have a bit of cash. I'm going to be adding a little bit, generating some income with these premiums. If I'm assigned Palantir, Apple, and the other one that I did, I have SOFI. I'm most likely going to be assigned. I have 10 contracts and I've done a video about that. But the thing is, like, I still want to buy these stocks and hold, and even at a cheaper price. And I get to be paid some premium. So that's what I'm doing, using options to manage my risk. And when I have the shares, I write covered calls, and I had a position on Walmart. I had a covered call. I cashed out a bit today, and when it goes up a little bit, I'm going to write a covered call. That's something that I've explained in the videos. Now, keeping cash is very important in a volatile market, and I want dry powder that is ready to be deployed. I must also say, even though there are these wonderful opportunities, I'm investing. I'm also aware of the risks that China might retaliate, or other countries around the world, and they could target companies like Apple, Tesla, and the broader tech sector. But I'm looking at the long term. There are also recession risks if inflation remains sticky. In other words, if it continues to hang in there or goes up, the Fed doesn't cut the rate soon. If the Fed doesn't cut the rate soon, then we could see a sharper economic slowdown, right? We don't know for how long this will be. So it's important to have some free cash flow. So I'm not playing with money for rent, for basic bills. This is money that I had made from my trading, and also I've been investing and building some positions over time. Now, the other thing that I will say is that timing the market is very hard. No one can predict the bottom, which is why I am staying disciplined and focused on high quality companies and dollar cost averaging. Now, as I recap this, yes, the S&P 500 is dropping, but this is in time to panic, in my view, if you are holding fundamentally strong companies and if you have a long-term time horizon. For me, it is time to stay informed, be strategic, and look for opportunities. I'm focusing on quality stocks, using cash secured puts, and keeping cash available for more dips. What are you doing in this market? Are you buying, holding, selling, or sitting on the sidelines? Drop a comment below. I would love to hear from you. I'm so excited to hear your thoughts. So if you found this video helpful, don't forget to like, subscribe, and turn on subscriptions notifications so that you don't miss the next update. Until next time, stay smart, stay patient, happy investing. Bye bye for now. I'm signing out. Thank you.